And joining us live now to talk about these changes is Carl Sussman, owner of Sussman Insurance Agency based down in Los Angeles. Thank you so much for joining us today on The Four.
Thanks for having me.
I want to start off just asking you, what are you seeing right now on the ground in Los Angeles? Is it difficult for people trying to get matched up with insurance policies?
It's been extremely difficult for the number, I'd say at least 3, 4, 5 years going on. And of course, now at the wildfires, people are looking to potentially move to other places or shop around for different insurance policies. It is very, very difficult. If we had one option or two options, maybe in the past, now we're looking at maybe one or maybe just the California Fair Plan.
Carl, if State Farm does pull out, could other insurance companies absorb their million-plus homeowners policies, since many of the insurance companies are all in the same boat?
It's a very, very scary thought because State Farm has about 22% of the market share for property insurance in California. And that is, as you said, multi-millions of policies that are out there. There is not a chance that the market in California could withstand taking on that level of risk as it is. Now, keep in mind, the Fair Plan has been growing even with State Farm in the market because there's not enough capacity with every other insurance company. So try and toss a few million policies more into that mix, it would not be a good sight.
And what other insurance companies are you seeing that are still staying here in the California market? And are you seeing a very big difference in the policy coverage and the pricing across those?
Well, that's the interesting part about State Farm is when you would see them pricing and their underwriting and the way they did business, you might see a handful of companies and they were all priced relatively similar. Then you would see State Farm and they would be a fraction of that cost, and they would be in an area that all of the other industry markets would not want to insure in. So it makes you wonder, well, how did that happen? Why were they doing that? Well, clearly it wasn't a very good gamble in the long run. But I think what we're going to see going forward is other carriers will start to come back slowly as these new regulations that started in the end of last year were passed. And so hopefully things will be better going forward. But right now it is a very, very delicate dance because we need to keep State Farm solvent. We need to keep them here with all of these policies. And at the same time, we have to find a way to keep those policies affordable.
So what advice do you have for someone who's trying to get a policy to cover their home or maybe a new home buyer?
Well, the best thing to do right now is start early, start shopping, because there are some markets that are slowly starting to open up depending on where they are. Start early, shop around, ask a lot of questions. And if it turns out that you do need to go with the California Fair Plan, be sure you do get the supplemental insurance that you need that goes along with that. And just keep your fingers and toes crossed, because I think within the next quarter or two, we'll start to see the market opening up again.
And, you know, for some people, they might have been making decisions about where they buy or what kind of home they do, improvements that they do in order to try and, you know, do the right thing, keep their prices low on their premiums. So does this mean that then those people who did their due diligence, maybe didn't buy in some of those risky areas, that they might also be impacted by kind of bearing the burden or bearing the brunt of some of those higher costs?
That's a great point. And as it turns out, with the new regulations that went into place at the end of last year, what we're going to see is we're going to start to see a much larger separation between what people are paying in higher wildfire areas versus what they're paying in other areas. The law didn't allow for insurance carriers to really make that much of a distinction between someone that's, 2.5 miles up a canyon, up a one-lane road that a fire truck could never even get on versus someone that's living in the middle of the city. So I think people that are in the city that made the decision to stay somewhere that is more centrally located will be paying significantly less than people that are living in homes that are further up in the hills.
And is this only a California problem? I know we've hurricanes in the east, North Carolina, Florida. Are they having some of the same issues all across the country?
This is countrywide by all means. Even Colorado, right? And you think about Colorado, nature, mountains, trees, they are coming up with a fair plan now because they're having wildfire issues. We're having weather-related and climate-related claim issues happening countrywide from Florida to Louisiana to Oregon, Colorado, you name it, it's happening pretty much everywhere. As you said, a different type of catastrophe, but nonetheless, they are starting to get hit with these large, large payouts and claims.
How are you dealing with it? I mean, you're the guy that's got to give people policies. It must be hard to be an insurance man right now.
Well, thank you for asking. No, I appreciate that. It's challenging because my job is to try and find the best policy, the best price, the best coverage for clients. And when there used to be a dozen options that we could sit and go back and forth and find the right fit, it's a lot harder to do that when there are, like I said, one choice of companies to pick from. So we're doing the best we can to try